Hello everyone, welcome. This is chapter 4. We're going to be covering banking. So today we're going to cover what a checking account is, and a little bit, we're going to talk slightly about some credit card transactions. Then we're going to go over a bank statement, and then we're going to do and cover a reconciliation process and a problem. So let's start with checks. We don't see them as much today as we used to. We have so many different ways to pay, but they still are around in a form of tender, I guess we could say. So what a check, its formal definition is written here. It's a written order instructing a bank or some type of institution to pay whatever amount is designated to the person, with the bank to a person or organization. So there's kind of three key terms here to this one that we need to understand. A drawee is the bank which is ordered to pay. It's written on the check, as you'll see coming up here. So the payee is when you write a check, you put who you're paying, such as Home Depot. You would write Home Depot on the check, and that's considered the payee. And the drawer is the one who's signing the check, or you if you're writing the check out, right? So when we get a check, though, from someone else, we take it to the bank and we want to put it into our bank account, we have to use something else along with it called a deposit slip. A deposit slip is listing our account information down here, so the bank knows which account to put it into. When you fill out a deposit slip, you're going to list our checks here. There's also a line, cash. If you had cash, just money you want to put in the bank, you write it here, and then our checks, we're going to write each one individually here. So we have two checks in this case. We have one for $1,800 and $200, and then we total everything up straight down the line. In this case, $2,000, and you date it. So date and checks added up. Pretty simple there. So this one going to cover what structure a check is, and the structure of a check are all the same. Again, the payee line here is who we're paying to. There's always the date up here that we're going to write. Here's the numeric value of the check that we're writing, and then on this line underneath the payee, we write the verbal amount of the number that we're trying to pay. You can write a memo or not down here on this line, just kind of a quick little reminder of what you are buying, and then you sign it down here on the bottom right. And then on the bottom here we have our routing number and our account numbers here. So let's, let me erase that. We're going to go over it. I was practicing there to make sure I was doing this right. So on page 95, we have a problem there, an extra practice quiz on the bottom. And let's just do that. We're not going to do the check stub. We're just going to write the check itself. So I would start here with our date. We have July 8th, 2013. Oh, let me get a pen that we can write with here. July 8th, comma, 2013. Pay to, who we're writing a check to, it says Lowe Corporation. The amount, $83.76. Decimal points there. And now we write the verbal amount. Oh no, sorry, I wrote the wrong. I was looking at the number above it there. Let me go back a little there. I'm looking at the wrong. 7988 is what we're. 7988. Now we write it in verbal form. This is always the hardest part for me, to remember how to spell numbers. So 79 and, right, represents our decimal point. Then we write our cents in fractional notation. So we have 88 pennies out of 100, right? Or 88 cents. So this is for advertising. And then we sign it. All right, so that's the basic way to write a check. Most computer programs such as QuickBooks and Quicken and all that, the computer would just do it itself, and it's much easier because it doesn't make mistakes like I do. And one thing to note as well, when you're depositing a check, the bank it's a federal law that they are required to take the verbal amount here and not the numeric amount. Many times at our office, we have someone writes a number over here, say 79.89, and over here they have 79 and 88 cents. By law, they're required to take this verbal amount. So pay attention when you're writing a check, because it is really annoying as a business to go and have to sort that out. So when we're putting that check, so say a check was written to us and we're going to deposit it into the bank. On the back of the check, we have to sign it over to ourselves. And there's three types of endorsements. We have a blank, a full, and a restricted. Blank is the I guess least restrictive one, and up to restricted. And why we might say that is if we look at the wording within these, this is just open to whoever has the check. You sign it, you put your account number on it, it's your check. Now, over here on restricted side, you have to pay to this bank, and it's for deposit only, meaning there is no cash that can be removed with this deposit. It's only to be put in the bank, and that's it. All businesses, I would assume, have it set up this way. This is how we have it set up in our office, right? Because we have different people dealing with cash, and you don't want them to be able to withdraw money from when they're making a deposit, right? You can see a problem with that if someone is allowed to make deposits and get cash back on it. You can have some problems. So restricted is the safest way to keep money from floating away there. Credit card transactions, this is kind of an old slide, obviously. So this guy's doing it manually. Well, he looks defeated. And then we have this lady with this old Mac-looking computer here. She's totally happy with her electronic deposit. Some of the differences to note, though, is with convenience, always there comes a fee along with that. To process credit cards averages about 3%. This is kind of what we pay at our office. That is the most confusing statement I look at, really. There are different fees for every type of card you can imagine. All kinds of different rates, how they apply. So really confusing, but there's processing companies that take care of all that. But for that convenience, you do pay a fee. So now let's get into the bank statement side of things here. Two things to note. We have a debit and a credit. A debit decreases our bank account, and a credit will increase our account. So we write a check, it's debiting our bank account. we deposit money, it's crediting our bank account. Okay, so this only works if you're an accounting major. This is only kind of for the bank statement here. Credits and debits in accounting are different than what is being shown here, just so you know that. This is somewhat of a generalized way that a bank statement might be shown. Up here we have who it's for, right? Who this bank statement was prepared for, what the account number is, the date here that it covers. It's always a month, I think. I don't know if there's another way to get it. Then you have it covers always kind of comes out on the last day, and it covers the previous month. Beginning balance, this would be the beginning balance as of 3/1, we'll say. So March 1st, beginning balance was 13,000, and then it goes through the month. Here's kind of just an overview of what happened. We had deposits that were this much, we had withdrawals of that much, and we had a service charge from our bank for keeping all this in our money for us of $28, and then so our ending balance with the bank shows that we have 11,863.02 as of that day. And then down the list here, then it shows line item of everything that actually occurred. So it'll show all our deposits and then our charges and our checks that have actually cleared. And then that'll give us down here at our bottom oh no, it's not our ending balance. Just kind of some our average balance within the days. So they're just taking up whatever was in the account on all days divided by how many days in the month there. So bank statement, we'll use this in conjunction with what is written on our checking account to do what is called a reconciliation. So here's our check register side of things. So that what we just saw was what our bank shows, what is going on in our account, and now we're showing here in our check register what we know is going on in the account on our side of things. So for example, we wrote a check for $75. Here's our checking account balance. You subtract $75, we get here to $335. We deposited $412. So we're plus 412. Now we're sitting at $748. Again, and we wrote a check. So we keep track as we go along. It's a very good way to do it. So you don't overdraft your account. Overdrafting your account can really hurt you, right? $35 or more, probably for an overdraft fee from your bank. Every time you overdraft can add up super quick. So now we're going to get into the bank reconciliation. Reconciliation just means you're balancing your checkbook side with your bank statement side and making sure that there were no errors reported, that the two match each other, and that your books are up to date and in good order. So when we look at our checkbook side here, there's quite a few things that we can that affect the checkbook side, right? All this electronic funds transfer, this note collected, and you'll see this positive. So that's adding to our checkbook balance, right? So it's increasing or crediting our checkbook balance, if you want to think of it like that. And then we have these other ones down here, our negatives, which are debiting, I guess, if you will. I don't like saying that way because it's kind of confusing. But so these are subtracting away from our checkbook balance side. And then book errors could be plus or minus, depending on which way you have to correct your errors. And then on the bank statement side, adjusting that we'll have to do our items, only these three, right? Deposit in transit, outstanding checks, and some bank errors. So much easier to remember these three, and then anything else goes on the checkbook side, if you want to think of it like that. So if you just remember deposit in transit and outstanding checks, only go on affect the bank statement side, and then anything else you see would just go on the checkbook side. So we have 4 steps when we reconcile. First, we're going to have sorry, my dog was barking at someone. Kind of annoying. So first step here, we have to identify the outstanding checks, and what they mean by an outstanding check would mean one that we've written. So say we've written check number 103 to pay our mortgage, right? So we wrote check 103 on the 29th of March. Our bank statement came out on the 31st. It was not listed. That check was not listed on our bank statement, but we know we've wrote that check, and so we have to account for it and subtract it off of our bank statement side to keep it in balance. So, and then same thing here. So that's decreasing our bank statement side. Number 2 here is increasing it. We have some deposits or some checks that people have wrote to us, and we have put them into our checkbook side. We've recorded them there, but we have not recorded them with the bank because we have not deposited them yet. So we have to increase our bank statement side. So number 3 is kind of looking at the bank statement first and looking for transactions not recorded in the check register, which would usually be bank servicing fees, almost always, fees or type of interest paid, something like that. It's going to be recorded on our bank statement, but it's not yet recorded in our checking account. So you have to find those and put them as and subtract them from our checking account balance. So now we have the 4th step here is check for recording errors in checks deposits. So make sure our checks, right? If we wrote a check for $100.28, make sure our bank side it says we have a check that clears for $100.28. So here's a completed bank reconciliation, and things that you need to note are who it's for up top here, Gracie's Natural Store, the date it was done, and what the checkbook balance was at the beginning of the month. Here's the bank's balance at the beginning of the month. Oh no, I'm sorry, this is at the end of the month. This is the balance as of March 31st. And then all these here have occurred on the bank side but have not yet occurred on our checkbook side, so we're adding them to it to get them into balance. So we go through our list. At the end, we need it to be balanced, and we call that reconcile, that the 2 amounts match each other, our checking and our bank side. And we're going to do one of these here. Trends in online banking. This is obviously kind of an old slide. Take for example, for our house, we don't even have a local bank. It is all done online. So when we get checks, we take a picture with our smartphones and we upload it that way. So things are kind of shifting more towards this online world. So let's do a reconciliation. A lot of people have trouble with these, and I want to kind of go a little slower through this just to make sure we're doing it. It is important just to make sure that you can do it on your own for your own balancing and to make sure you're watching your accounts correctly enough. So this is going to be for Earl Miller. He received his March 8, 2013 bank statement. This is out of the book. It's learning. It's the 4-2 extra practice quiz there. One thing to note, I don't know why they would say as of March 8, 2013. You don't receive your bank statements in the middle of a month like that. You'll always receive it. It'll always be dated the last day of the month. Unless, I guess you can set it up a different way, but I've never seen it that way. So, our goal here is to take what is all listed here. Take all these and make sure we're adding and or subtracting on the right side of it, and then at the bottom to add and subtract, get the same reconciled balance. That's our end goal here. So we'll go through this kind of one at a time, a little slow to get a hang of it here. And again, on the bank side, the only two transactions that affect that side are outstanding checks and deposits in transit. So when you see those two words, you know that they occur over here, and then everything else other than deposits in transit and outstanding checks occur on this side. So it says we have a bank statement March 8, 2013, had a $300 10-cent balance. So his bank balance over here was 310. Okay. His checkbook had a balance of 1200. $1,210. Bank statement showed, I spelled that wrong, a $15 ATM fee and a $30 deposit check return fee. So if you can't, let's think kind of slowly what this might be. So the bank, I'm going to walk it through it kind of slowly. So the bank has, on the bank statement, it has these fees, $15 and a $30 fee, that does not occur yet in our checkbook balance because we didn't realize we've had them, or we just haven't recorded them yet. So these, whenever it says fee, right, it's reducing our balance. So we need to reduce our checkbook side to reflect these fees already shown in this number here, in the $300. So those two fees, so ATM at $15, and then a $30 return check fee. So we bounced the check, I guess. So return check for $30. So let's keep going here. Earl earned 24.06 cents of interest. So on the bank side, it's showing he had he gained $24.06, and now we need to record it over here in our checkbook under add. So interest earned. So we had interest 24.06. He had 3 outstanding checks, number 300, 302, 303. So again, outstanding checks are checks that we have written out of our checking account. We know that we have written them, but the bank has not seen them yet. So we have to reduce our bank side balance by those amounts. So we have number 300, 302, and 303. For 2288, $15.90, and $282.66. All right. And then last thing here says a deposit for $1,200.50 was not on his bank statement. So let's say we got this check on March 8th, this $1,200 check, and we put it in the bank, but it wasn't early enough to show. So deposit, it's called deposit in transit, right? Of $1,250. All right, so now we just kind of go down and add as we go. this is these two numbers added together, and then over here we have 321.44. So 321.44 is these three checks added together. So we start here. So we had a balance of $1,200. So we add 2406. So we get 1224 and 16 cents, right? Our beginning balance plus the interest that we earned, and then minus the $45 gets us our reconciled balance of 1179.16. Let's try that again. 1179.16, right? And we double underline things to represent the end. So let's go over here. We had a balance of $300.10. We need to add 1250 to it, gives us 1560. And then we need to subtract 321.44, gives us an ending balance of 117916. They match, the reconciled balances match, so we're good, we're finished there. So that's all there is to that there. The trickiest part, again, is just remembering where they go. But if you can remember, on the bank side, there's only two things that affect it: deposits in transit and outstanding checks. And anything else you see, fees, return fee this, ATM fee that, interest earned here, that only affects this side over here. So when you see other problems like that, try to remember it like that. Alright, that's it for chapter 4, and I'll see you on the next video.